tax, a responsibility, or burden.
A scientific genius, Mr. Albert Einstein, once said, in humorously quipped, that the hardest thing in the world to understand is the income tax. Even a brilliant mind like his, found tax matters difficult to understand. Okay. The idea of making this video, is simply to understand, what are all the taxes, a middle-class salaried employee has to bear in India. Let us name him as Mr. MC for better understanding. First of all, what is tax? In simple words, tax is a mandatory fee or financial charge levied by any government on an individual or an organization to collect revenue. Why? Again. In simple terms, the revenue collected, are one of the government's most significant income sources, helping them build country's economy and infrastructure. Now, let's understand, what are the different type of taxes levied in India. The Indian tax system is broadly categorized into direct taxes, and indirect taxes. First let's talk about, direct taxes. Direct taxes are those which are directly imposed on an individual's income, profits, or wealth. Let's see the examples of direct taxes. Number 1, income tax. This tax is based on an individual's income and is governed by the Central Board of Direct Taxes, CBDT. Number 2, corporate tax, applicable to companies and corporations. Number 3, property tax, levied on property ownership. Number 4, capital gains tax, on profits from the sale of assets. Number 5, wealth tax, based on an individual's net wealth. Number 6, gift tax, on gifts exceeding a specified limit. Number 7, securities transaction tax, STT, on stock market transactions. Now, let's talk about indirect taxes. Indirect taxes are those which are levied on goods and services. Let's see the examples of indirect taxes. Number 1, goods and services tax, GST. Replaced multiple indirect taxes and aims to eliminate the cascading effect. Number 2, excise duty, imposed on certain goods produced within the country. Number 3, sales tax, charged by sellers on taxable goods. Number 4, custom duty, on imports and exports. Number 5, value-added tax, VAT, replaced by GST but was previously applicable at the state level. Number 6, entertainment tax, on entertainment services. Number 7, service tax, on specific services provided. So, these were the different taxes applicable on Indian citizens. Now, let's do the breakup of taxes, and see how much our middle-class salaried employee, Mr. MC, has to bear, living in India, 2024. Let's say, Mr. MC is earning Rs 15 lakhs per annum. If we divide Rs 15 lakhs per annum salary in months, it will be 1,25,000 per month. On Rs 1,25,000, 30% income tax will be deducted, which will reduce the amount to Rs 87,500 per month. On Rs 87,500, Rs 200 will be deducted as a professional tax, which will reduce the amount to Rs 87,300 per month. So, Mr. MC gets taxed salary of around Rs 87,300 per month in hand, out of Rs 1,25,000. To keep it simple, we are not talking about other deductions, which a cost to company, CTC, format does in private firms. Now, with this taxed income, Mr. MC goes to market to purchase necessary items. Again, to keep it simple, we are not talking about luxury items. So, with this taxed salary of around Rs 87,300 per month, Mr. MC has to pay further, to the government in the name of indirect taxes for his daily needs for necessary items. And, what are they? Let's see. If he wants to purchase a house in India in 2024, he has to pay GST around 1% to 5% plus stamp duty and registration charges, which may range from 5% to 7% of the property's market value. Or, if he owns a house, he has to pay property tax depending upon property, plus additional charges as maintenance, cleaning service charges, etc. Or, if he wants to sell the property, then he has to pay LTCG tax around 12.5%, without the indexation benefit. for LPG cylinder, he has to pay around 5% GST plus distributors and dealers commission plus delivery charges plus establishment charges. For a 25 kg rice bag, he has to pay around 5% GST. For a 10 kg wheat flour bag, he has to pay around 5% GST. For all type of pulses and cereals, he has to pay around 5% GST. For items like sugar, packed paneer, edible oils, tea, and roasted coffee beans etc., he has to pay around 5% GST on each item he purchased. For all type of spices, around 5% GST. For packaged milk, around 5% GST. For butter, ghee, cheese, around 12% GST. For ice cream and dairy-based desserts, around 18% GST. For processed meat, around 5% GST. For clothes, around 12% GST. For mobile recharge, around 18% GST. For internet recharge, around 18% GST. If Mr. MC wants to purchase new bike or new car, then he has to pay around 29% to 31% GST. For 1 liter petrol charges added are central excise duty, around 19.90 rupees per liter, state value added tax, VAT, for Telangana it is around 19.40%. Plus some additional charges. For dining in restaurants, he has to pay around 5% to 18% GST, plus other expenses, like paying municipal water bill, paying drinking water bill, paying electricity bill, paying kids' school fees, paying for kids' uniform, paying for kids' books, stationery, paying for health insurance, medicines etc. etc. At month end, Mr. MC may hardly left with some amount, which obviously not sufficient for him to buy vacation or luxury item. Instead, he decides to save that money for his kids' future. He will save that money for months and invest as fixed deposit with his so-called saved, taxed money, for which again he has to pay TDS around 20%,